First, we're off to Mike at the wall with the latest in Japan. Mike?
Well, as Linda, you mentioned commodity stocks, they are falling around the region. Japan, no exception, with crude oil dropping 4% on Monday. INPEX is Japan's biggest oil explorer, down 1.5%. Number 2, Japan Petroleum, down about 1%. Also, copper dropping the most in a month on the London Metal Exchange. Sumitomo Metal Mining, the biggest non-ferrous metal producer here in Japan, down 2.8%. Trading companies also hit. Mitsubishi, the biggest, down 1.3%. We're also seeing consumer electronics shares falling. A stronger yen cutting overseas revenue, particularly in Europe. It's going against the euro for 4 straight days. Sharp down nearly 3%. Sanyo Electric down 4.8%. We're seeing a lot of the green shares that had been rising, such as Sanyo and GS US, are being sold off quite heavily over the past couple of days. A different story at Canon Marketing, up 7.4%. Nomura raising its rating on the stock to buy from neutral. The company distributes Canon's products here in Japan. Canon shares actually lower today, though. Taking a look at convenience store chains, Family Mart shares rising strongly, up by 5.8%. It maintained its full-year forecast, says net income's going to rise 14% this year. In the first quarter, though, the convenience store's profit down 17%. There were accounting changes, which meant for the first time on a quarterly basis, it had to book impairment charges. That accounts for a lot of that drop. Seven & I Holdings shares, different picture there, down 1.2%. Mitsubishi UFJ cutting its rating to underperform from outperform. As of this month, Japan's largest retailer is paying owners of franchises of the 7-Eleven convenience store 15% of the losses that they rack up from throwing away unsold lunchboxes. Before, the franchise owners had to cover the whole cost. And the Nikkei newspaper says this is going to raise annual costs by at least $105 million. Checking Brewers, the Nikkei newspaper says Asahi's first-half profit about $10 million better than the company's forecast. Sales of no malt beer and also soft drinks higher than expected. The Nikkei's forecast is pre-tax profit of $283 million in the 6 months through June. That is still 21% lower than a year earlier. Now, the paper says demand for regular beer still weak, the company also paying higher retirement costs. Taking a look at the big 3 brewers in Japan, Asahi surging away there, up 3.6%. Kirin also higher, but Sapporo unchanged. Linda, back to you.
Mike, thanks so much for that.